So thank you for the encouraging feedback on my first video, and you want to see more, so here is more, but just a little bit about myself before we proceed. I'm a Christian from Singapore, and I have been doing professional speaking for the last 20 over years, and that includes financial talks. I want to make a disclaimer that I will not recommend, and I do not recommend any stocks, at least not for now. So if you hear me mention a stock counter, don't go buy it because it's just using it as a study or a case study. I've done it before. I've given stock tips for that period, and then I get a letter 8 years later and said, you know, the stock that you recommended, I lost money. Of course, it's 8 years later. Hello. So I'm going to make this disclaimer that none of the stocks that are mentioned is a recommendation. So this channel is more about understanding your trading psychology, which I feel is the final stage in all your other education that you had on trading. So the first tip today, which is my fourth tip actually, because it's the second video, is if you understand your own trading psychology, you are going to save yourself a lot of losses. Okay, what do I mean by that? So in the early days, I paid very good money to attend this workshop and this analysis and that fundamental analysis, and you know, I lost almost I lost more money than the course fees itself. I mean, like maybe 50 times more than the course fees itself. And at the end of the day, I knew one thing: I didn't have the kind of discipline. Or was it really called discipline? It was just not my temperament. So when you do charting and you do technical analysis, a lot of this analysis are historical data, and it tells you about the past, and it gives you some kind of prediction about the future. But I always think I'm smarter than the technical analysis, so I second guess. I will make wrong purchases, or I make wrong sales, or when it's time to sell, I don't sell. I want to hang it to hold to the end, and then the company just goes bust. So I lose money because I knew that my temperament didn't suit a certain type of trading. Okay, so there are day traders, there are short-term traders, there are long-term investors, some are going for dividend yield. Find out what kind of temperament suits you best, and hear how you talk to yourself or when you talk to people, and then you understand what kind of investor or trader you are. That will save you a lot of losses or make you a lot of money. For my fifth tip, I want to let you know that everyone has an opinion, but you know, we just take stock tips so easily when someone tells you, you know, I heard that this guy, and you're so easily convinced, and then you put money in because someone told you, hey, look, this is great, this stock is great, you know, there's a company buyback, or the CEO and the CFO bought this stock, and then you just jump in and you just go and buy it. First of all, I want to let you know that every time you buy a stock, you bought from someone who has a different opinion of that stock. That's why he's selling. The day that you're buying is the day that he's selling. Okay, even Warren Buffett don't get it right, because not so long ago when he said that he's done with airline stocks, I think he sold Southwest, was the day that I bought. At the end, I made money, and in that particular instance, Warren Buffett was wrong and I was right, but that doesn't make me a genius. There's no way I'm going to say that. It's just that the opinion is different at that point. So the point I want to make is this. Now, when someone tells you buy this stock, there is someone who tells someone else sell this stock. Okay, it's almost like a 50-50, and if it's not, then if more people think they want to buy, that's where you get a rally, and if more people think they should sell, then it goes down. Now, the point is this again, okay? You would spend an hour or maybe half an hour deciding on whether you should buy that shoe, and then you spend 5 minutes and you decide, I will do this trade. And that, I realized, was one of very foolish thing. If a shoe costs you $100 or $200 and you spend half an hour or an hour deciding whether to buy that shoe, and then it's so ill proportion when you're going to invest $5,000, $10,000, $100,000 on a stock, and you don't spend a week going through and understand and analyzing that stock. That's insane. Okay, and I know a lot of people will just say, I don't know, I'm just leaving it to my banker to do it, I'm leaving to my RM to do it, and all that. Okay, if it works for you, fine. Okay, but I'm sharing with you, in these days I spend a lot of time going through the stock, and I will share with you more strategies later on how you narrow down the best stocks to buy. I want to share with you that I always have this thing at the back of my head. If this was my kids' money, would I have invested in that stock? And no, I will be careful if this is my kids' money. So if it's my money, why am I so reckless with it? Okay, so I become more careful in making very sure that that stock is a good stock before I buy it. Okay, so for my sixth tip is sometimes you hear people making a lot of money from crypto and GameStop and things like that. And there's this word called FOMO, fear of missing out. So you want some skin in the game. And if you agree with me that these kinds of wins are very, very unhealthy. Why? Because if you go into a crypto and then you make a 10 bagger or a 12 bagger, I'm almost certain you said, I can do it again. So the next round you said, it was so easy. The first round I picked the right coin and I did it and I made that kind of money. So I will do it again. You know why I say it? Because I did that. Okay, I took a simple $10,000. I bought the first coin. It made me 12 times. Overnight I made 120 grand. And then after that I said, wow, if this is so easy, I'm going to put some money in so many coins. And after that it went south. Okay, if you treat this kind of marketplace like a casino where you bet and you hope you have fast returns, you start using the stock market like a gambling den, like a casino, rather than investment. You see, the difference between investment and gambling is based on chance, based on luck. Investment, you increase your chances of winning simply by having more knowledge. The more knowledge you have of the stock, of the counter, of the news, of the technical analysis, the more information you have, the chances of winning is much higher. Okay, so don't FOMO if you hear someone make a lot of money. Well, congratulate them and say, I'm glad you did it. But you yourself, don't rush in because the casinos open every day. The stock market's not going to close. Okay, it's going to be tomorrow. You can make your money again. Okay, all right, let it go. Let this opportunity or big win, someone made a big win, congratulate them. Fine. Okay, if you don't, remember, if you go to the casino, at the end, when you're a long-term player, the house always wins. I hope you enjoy this content, and if you do, I will come back and give you more tips.